It's a pleasure to talk to you guys again on this presentation. My name is Seewing Yee from the Real Estate Network, and my co-host is Maureen McCann from Spartan Invest. And all we try to do out there is educate and inform and inspire and motivate real estate investors out there to take the best step for yourself and your family, because everything you want in life is on the other side of fear, F-E-A-R. So with that said, Maureen, thank you for attending once again. I know you have a very, very busy life and what have you, and you're doing so well for your investor database as I'm doing with mine. And so today's topic, which is a very interesting title. And in fact, this will be mostly Maureen, your presentation, because we need to get a woman's touch on this, right?
Date the interest rate, marry the house. Let's see what this is all about.
Yeah. Well, better yet, marry the rental property forever, right? Because you are a real estate investor, so that's what it's all about. And really, I have not too much to share other than, what's going on in the current environment is just that we are seeing, the mortgage rate rise exponentially from last year's 2021 from 3% to 3.5% to right now to a whopping 5 to 6%, and people are freaking out. But just hold the horses, okay? Because the core of this message of this short presentation is date the interest rate, marry the house. What does that mean? Let me give you my quick perspective, then I will have Maureen to talk about this. In fact, let me go back to the regular screen. My take on the, date the interest rate, my take is interest rate go up and down, right? When you buy a rental property, you lock in a 30-year mortgage. Right now, because of the skyrocketing prices and with the rent are slowly catching up, with the massive skyrocketing of rents going on out there, we all been hearing that. But still, the mortgage rate is 5 to 6% for real estate investor, you're not getting that much of a cash flow. So take the interest rate because eventually you can get rid of that date, okay? But marry the house means, especially for a real estate investor, even for a primary home buyer, you need to have at least a 7-10 year horizon when you buy a house, because all the mistakes people made will be forgiven if they hold the house long term. I mean, whether there's a recession or inflationary environment or crash or correction, whatever, if you hold your primary home or rental home for the long term, you'd be fine, right? So take the interest rate, because we know that for a rental property owner, you buy right now at a slightly higher interest rate than you would want, 5 to 6% as we speak, with a lower cash flow, but get in the game, invest and wait instead of wait to invest. And again, my take is take the interest rate because you can always refinance later when interest rate is lower for your rental properties, and you can get more cash flow down the road. And then marry the house, marry your income property, because your income property will allow you to achieve multiple streams of income, because as a real estate investing is a multi-dimensional real estate asset class, as we discussed many times. So with that said, Maureen, I would like to hear your take from a woman's touch. What does it mean by date the interest rate and marry the house? What are your take?
Well, okay, so let's give a little perspective here, right? So does anyone know, I know you can't raise your hand, you can't respond, so I'll answer the question, but does anyone really know what the interest rate was in 2019? It was 6%. So we've been here before, right? We've been here before. This is not astronomical. When you couch it in terms of, well, the interest rate 6 months ago was 3% and now it's 5.5%, it makes headlines, and, it causes people to hesitate. Okay. So the 30-year fixed mortgage, even Warren Buffett said this, it is really your best friend. It's your best friend because you are locking into a fixed rate payment. You're locking into a fixed payment for 30 years, right? Guess what happens to rent over that 30-year period? So this is why you marry the house, right? You marry the house, you get the benefits. When you get married, we want benefits, right? And one of the benefits is of marrying the 30-year fixed note inside or attaching it onto a rental property is that there is one thing that is guaranteed. That payment is not going to change. It's not going to change ever. 30 years, unless you cash out refinance, right? But that payment does not change for 30 years. And as we have seen, we could pull up chart after chart after chart. And if you guys are tuning into other, podcasters, I love Keeping Current Matters. He has a lot of Dave Childers with Keeping Current Matters. He's got a lot of great data and infographics to really give these. If you're a picture person, he's your picture person. He can give you the graphs to show you that rents historically, if you look at them, they rise continually. They're not these great exponential, rocket rises in rents, but consistency is the key. And they consistently rise year over year, but your payment does not. So this is where you may look at getting into an investment property today at a 5.5 or 6%. Let's call it 6.5%. I give myself a range in case they change, right, from the recording of this video, right? That payment is fixed, but rents will rise. Let me just share with you. I just got this data from, and I'm going to cheat, right? I just got this data from my leasing director out at Spartan Invest. So she looked at April, May, and June. She looked at the average rent increase, the highest rent increase, and the percent of the rent increase. And then she looked at average days on market and average days of deposit. So I am just going to roll some numbers out to you guys so that you can see that rents do increase. So the average rent increase for April of this year, $85.32. The average rent increase for May, $127.78, a significant increase from the month prior. June, the average rent increase, $133.59. Now look, we may have had some properties that were not undervalued, that we were renting at lower than we should have. And so we caught those. So the highest rent increase for April, $285. The highest rent increase for May was $255. And the highest rent increase for June, $375. So if you look at the average rent increase just month to month, it was 9.5% for April, 14.25% for May, 15.28% for June. And if you tuned into, some of the experts out there, they were saying across the United States, the average rent increase was 15.5%. I know in some markets it's higher than that. I know in other markets it's lower than that. We just have to talk averages, but this is real data just from Spartan Invest. So our average rent increase across the board for just the last 3 months was 12.94%. So does that prove to you, show you that over that fixed rate mortgage period, do you think our investors are happy that have a fixed payment, let's call it whatever, $700 a month, but their rent is increasing 15% or 12.9% in the last 3 months? Yes, right? That's the power of owning the hard asset. So you marry the house, you marry that sucker and get the consistency out of it.
Yeah, for example, this is a real example from your Spartan Invest portfolio. This new construction homes for 230,000. It only rents for 1,300, but you're dating the interest rate at 5.5 to 6% right now. Get in the game, and then the cash flow is not very high right now. It's a mere $32 net monthly cash flow. But we discussed earlier, real estate is a multi-dimensional asset. There are 5 ways to make money out of that. Cash flow is just one way, and appreciation, tax benefits, and leverage all multiple ways. So don't be too anal about this pro forma right now. Per what you just said, the rents are skyrocketing everywhere all over the U.S. because of the home affordability has been the lowest in the past 40 years due to rising home prices and rising mortgage rate. So therefore, we're getting many more tenants, and landlords are raising their rent. So this cash flow you buy right now, low cash flow that is, you'll get in the game, get the other profit benefit from this asset, and then per what you just said, in your market, in which this property located in Alabama, for example, nice cookie cutter home, you could expect to receive rent systematically in the next few years. So everything will be fine, and then you'll be on your way. When you invest over time, 7, 10, 15 years as a real estate investor, you marry the house forever, and the house that you marry and the interest rate, the date, you're going to get rid of that date. If something didn't work out with that date, okay? So you need to get rid of the interest rate, high interest rate. You get rid of this high interest rate, high maintenance date, and cash out refinance hopefully in the next few years at a much lower rate, much lower maintenance date. So that's great.
We're dating coaches. We're teaching you how to date here. This is what we do.
That date will become your permanent spouse, marriage couple, for example. That permanent spouse is your home, is your income producing property. You can keep it hopefully until death do us part.
Oh my gosh.
That's my final message. You have any final thoughts before we're done with it?
Marry the house, date the interest rate. The interest rate's going to come and go. You've had dates that have come and gone, right? And you're going to get rid of you're going to get rid of the interest rate date when the rate goes down. So that's why and here's the thing, guys, think about it. A lot of us included, us and Seewing and I are included, right? We made in the past, in the very distant past, we made decisions on buying rental properties based off of the cash flow, right? The cash flow doesn't look as sexy right now, right? Because the interest rates have risen, the cost of borrowing has risen. And so it squeezes our cash flow. The asset, as long as it still produces cash flow after month after month after month, even if it's not the $500, $400, $300 that you want, if it's still producing the cash flow covering your debt service, and it's putting you in the game for your own house to raise capital for you, that rental property to raise capital for you, so that it puts you in a position in the next 4 to 5 years to buy another hard asset that will produce cash flow, maybe even sexier cash flow at that future time, because maybe you got rid of the date. You told Mr. Interest Rate date to go away because now you found someone who's coming in a little bit cheaper, a little bit sexier, that puts more monthly cash flow in your pocket. So this is what we're saying about marry the house and date the interest rate, because the interest rate's going to come and go. But marry that house, keep that rental property, because you got lots of consistent ways to earn over time.
Well, I couldn't say it better, Maureen. Very well put, very good analogy. And hopefully this video will capture a lot of good value. And so Very, very good perspective. Thank you so much, Maureen McCann from Spartan Invest. This is Seewing Yee from the Yee Real Estate Network. And thank you so much for listening. Have a nice day, and I'll talk to you guys soon. Bye bye.
Bye.